All right, traders. Well, we're nearly ready to do some more scalping on the Dow, the open of the Dow. And I'm going to follow the system that I always follow and that I teach other people. I'm going to follow this system because it's fantastic for scalping. In my view, it's fantastic. You know, scalping is about taking parts of price movement out of the market. And, you know, you're not sitting in trades forever. You're in, you're out, and then you wait for another opportunity, and then you're in and you're out again. That's what scalping's all about. It's exciting. It surely is exciting. You can't get carried away. You have to be disciplined, and you have to wait for your entries. You have to wait for your entries, and you need definite signals to take your entries. Now, if you watched my last scalping video, I'm going to use the same signals as I did then. And what I look for is I look for traps, and the sort of traps that I'm looking for involve normally a candlestick turning from green to red or red to green. Early on in the candlestick, it changes from red to green or green to red. And that's the content within the candlesticks that I look for. I look for content, context, and confluence in my trades. Three things, and if all three things say the same thing, then you've got a good probability. And then all you need to do is make sure you've got a reasonable risk and reward situation. And if you take trades at good context levels, then you've probably got good reward to risk opportunities as well. So I often use the bottom of a trap or the top of a trap to put my stops, to place my stops, and hope that there is also some additional support or resistance in there in terms of the exponential moving averages. That's what I'm looking for. So we're going to do the scalping on the Dow, and it's got a few minutes to open. We're going to join the price action now. Enjoy. Okay, well, we're joining this and you're joining me just before the open on the Dow on the 29th of July. It's supposed to be a quiet time of year, but I'm just waiting for the market with just under a minute to go now, I'm waiting for it to pull back down and then burst up, all being well. And so what we've actually got here is we've got an uptrend, as you can see, and I'm looking for the market to bounce upwards. Big red bar, but it's followed by an equally good green bar. So I'm looking for this candle, which is the one before the open, to pull back, or the open to go red. Here we go. There, red and then green in. Long. Right, in long, stop down here, entry here, above the 8 EMA, above the 20 EMA. So I've got those as support for my trade, entry just up here and stop down here. So just, you know, a 10 point or less stop, and there, looking good. Looking good now, and we're at the 35,140 level. I think it can probably make in this quick burst. Now I've let it slide back. I think we can probably make the 35,150 level, and I'll be looking to take profits there. And so that would be a 5-to-1 reward to risk, which would be fantastic if we get it. But anywhere here is still good, you know, at 30 points to the good with a 10-point stop, 3-to-1, and that's good. And I'm using my judgment here. Everything's saying this is going up. And sometimes you get a quick reversal back down, and at some point in time it will come back to this value area here. Here we go. Here we go. Wait until it's finished though, and it's not finished breaking out now. This is around about my profit level. There, that's my profit. Okay, I always like to take profits when that's right at its high. There you go. I gave up 4 or 5 points there by taking it too early. But anytime you go long and you've got a full green candlestick with no wick on the top, you've got no regrets taking your profit at those levels. So what we got, just to review, incidentally, I'm just waiting for this to come back down, as it probably will. Look, you've got the value area here on the 5-minute chart, it's way above that, and you've got the value area here between the EMAs on the 1-minute chart, and so it has to come back down to value, and depending on how quickly it comes back down, I'll be looking to take a bounce trade. I'll be looking to see where the candlestick closes near to the 8 EMA, and then I'll be looking to go long if it closes above it and close to it. Okay, look at that, just checking, we're right near all-time highs now, right at all-time highs, so you can often see a sharp reversal from here. We'll have to wait and see. Right next to it, wouldn't bet on it going much higher than this at this point in time. Anyway, you know, on the 1-minute chart we are good for longs at the moment still, but you can expect a reversal at some point in time here. Before you get the reversal, and as part of the reversal, we'll have to wait and see where this one closes. Just waiting to see. Wait for my trap. That could be the trap we're looking for. Next candle to go green. Wait and see where it closes. There. Now. Long again. Long again. Stop is just down here. And I'm long, expecting a bounce. And an R in a bit at the moment, but it should come through. We've got 20-point gaps between these numbers here, so anything like 20 points is good for a trade. Is good. Right, I'm going to take my profits in a minute. There. Okay. That's good. When you get a full green candle, could have taken another trade there had I have got out when I should have done, which was here, but I was talking. So, look, you've got your trap at the bottom, traders going short with the candle opening red, and then it went green. And you have to take your profits quick on these trades because it wants to go down, this market, but it's got to, you know, the principles of the way the market works are that, you know, you're in an uptrend and it has to have significant failures at the top before it's going down, even though it's near all-time highs. And then when it does start going down, you should see it go down quite quickly. Right, there's another trade here. And that's your profit. Okay, good. Good. So these candlesticks, as you can see, are all closing above the 8 EMA. Anything closing below it means that we're not playing a bounce. You know, also if the price closes up here, I won't be looking to immediately go long. But whilst it's hovering around about this area, there, look, there, maybe it's changing now. We'll have to wait and see. But if it closes above it, no, it's closed below it. Now look, the ATMA was there, it was acting as resistance temporarily. Maybe not for long, but you can see how it's reacting. Rejection, 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 rejecting the highs, but being supported by the 8 EMA. As soon as the 8 EMA starts acting as resistance, that changes, and it's not ready yet. It's not ready yet to go down. Everything on this chart says go long, but its price is a long way from the EMA zone at this point in time. See what happens here. Will it close below or above the 8 EMA? Let's wait and see. Below there. So we're not going long, and we can expect it to start going down, I think, soon. Okay. Bear in mind with any short trades that you take in situations like this, that you've got this line here on the 5-minute chart. So yes, you could have taken a short there and you would have got 20 points out of it, but you've got to get out for your profit before the market gets down here, because it is likely to bounce up as it has done. Starts getting complicated when you've got lines like this in the way all the time. And so, you know, I would still favour a long trade if the market closed above the 8 EMA here, which it hasn't done. So it's closed below it. So we've got 20 points to play with. So we'll wait and see till we get an opportunity, which is going to depend on what the outcome of this candlestick is here on the 1-minute chart. Going down. It's wanting to go down at the moment. We're scalping and I'm loving it. We're taking bits out of the candlesticks. Right, that closed below, so if this goes red, too long now. You need the changing colour to happen early on in the candlestick, and that's too late now. Even if it goes red now, it's too late. No long here because that there is too far away from the EMA zone and also below a potential resistance level. So by, you know, if you ignore those sort of signals, then you've got a problem, because you've got lower probability in your trade. And so we have to try and get as many things as possible going for us. Just going back to the open here. Okay, 3 C's: context, content and confluence. And first of all, I went to myself, confluence. The confluence is longer term uptrend, market moving up, momentum moving up. And then you've got the context. Well, it opened right on the EMAs, which had just crossed over, and so I was looking for a long when it went green. This is looking like it might go down now. Got the content because I got a trap laid by this candlestick, the opening candlestick, going red and then going green. Okay, so now I'm looking for it to pull back up a little bit, and then, you know, does it go down? Does it start going down? Confluence for this potential trade is big rejection at the tops, near all-time highs, likely to go down a little bit. But we'll have to wait and see where this... We're playing the EMA game here. That was my opportunity to go short, and I missed it. because I didn't take it because that was too far away from the EMAs. So when it turned red here, too far away, and we missed out on 20 points. But there you go, never mind. Never mind. Now we've got price below the both EMAs and below the EMA zone on the 5-minute chart on the master time frame, as well as the trading time frame. Have to wait for a pullback here before taking any trades. Right, we might have a short coming up there because price is just below the 8 EMA and I expect it to bounce down. There we go. You've got your trap, little bit of rejection at the tops, so that's a trap for the bulls, expecting it to go up. Went red immediately and I went short immediately, and I'm now out of the trade. I only got 10 points on that one, but the risk was almost nothing. So when I say almost nothing in points terms, it was almost nothing. So now we've got price miles below the EMAs on that chart, miles below the EMAs on this chart as well, and I have to wait for it to go back up to take any more trades short. And that's scalping. That's scalping on the open. I really hope that you enjoyed that video and the live price action on the Dow this morning. And it's of course afternoon in the UK. Nice, volatility, nothing extraordinary. 20 points between the numbers. That's what we're getting at the moment. We were in an uptrend, spiked up, and because of the fact that it was a spike at all-time highs, it was then going to go back down again. No doubt about that was going to happen, and it did, and we were ready. Missed a trade there and got one further down, and so that's all good. That's all good. Hope you enjoyed that. My name's Anthony Beardsall from the Excellence Assured Trading Academy. If you want to work with me, drop me an email via my website at excellenceassured.com, and I'll catch you on the next video. Do subscribe for more videos like these. If you're interested in scalping, short-term trading on fast charts, 1 minute, 5 minute, then I'm your guy. I'm a coach, I'm a trainer, so hopefully I can make sense to you, and I look forward to working with you. Cheers for now. Bye.